Valuing the insurance business is an especially complex affair. Understanding of the various terms and parameters is still evolving as there are only 6 listed insurance companies at present in India, with LIC comprising a lion's share of the market, followed by SBI Life, HDFC Life, ICICI Prudential, Bajaj Allianz and Max Life. Studying the basic parameters is especially crucial for retail investors who've set their eyes and hearts on the mega LIC public issue that's set to hit the markets in March this year. Seen as the mother of all IPOs with initial size of 1 lakh crore as per some estimates, it has infused many policyholders who've been long-term customers of LIC. They hope to get a chance to own a stake in the big daddy of stock markets through the policyholders quota, and many of us are likely to be first-time equity investors with little or no understanding of equity and IPO investing, let alone being able to value insurance companies. Worry not, we have a simple-to-understand guide on some of the key parameters for policyholders opening their maiden demat accounts to invest in the mega LIC IPO. Number 1. Embedded value or EV. Now, this metric is central to the process of valuing an insurance company. The embedded value is the sum of the present value of the insurer's future profits and its net worth, which essentially is the difference between total assets and liabilities. Once a company announces its IPO, the EV as computed by the actuary in charge will find a mention in the offer documents. But EV by itself will not be the determining factor. The bidding process will throw up a price band in case of a listed insurer EV along with the company's market cap and price, which will give you the EV multiple, and that will hold key. Currently among listed players, the 1-year forward price to EV multiple of HDFC Life is more than 3 times. SBI Life meanwhile is more reasonably balanced with market price to EV multiple of less than 3 times. Next up is return on embedded value, also known as ROEV, which is another important measure of an insurance company's valuation. Think of it as how much profits a company is able to release each year out of the embedded value that it has locked in. Therefore, it represents the efficiency with which the company is running and also validates the assumptions the company has built into its embedded value and mathematical reserves. Value of new business VNB is often termed as embedded value at the point of policy sale. It represents the present value of future profits from policies issued in a specific period. Look at it as the amount of additional EV a company generates by writing new business in a financial year or quarter. Market price to VNB multiple also plays a key role in insurance company valuations. If we compare the market price to VNB multiple, HDFC Life's 1-year forward is at 41 times, which is around 32 times in case of SBI Life and ICICI Prudential Life Insurance. As an investor, you need to keep an eye on the VNB margins too. It's the profit margin at which new business is being written. Another important monitorable is agency strength. Bank assurance channel, that is selling policies through partner banks, gets a higher billing if you compare that to other channels, though individual agents do help diversify the customer profile. And then there's also market share to watch out for. Though LIC remains the leader by distance with a market share of over a whopping 61% in new business premium collections, the downtrend necessitates some amount of caution. One needs to also keep an eye on APE, which is annualized premium equivalent growth. APE is the sum of regular annualized premium from new business earned during a particular period and 10% of the new single premiums collected during that period. Another monitorable is product mix. Now, product categories impact VNB margins and are hence critical while evaluating a company's business. Persistency ratio is also important to watch out for. A higher persistency ratio is a favorable metric. Typically, 13th and 61st month persistency ratios are taken into account. It basically indicates the insurer's customer retention record. We hope you'll now be more equipped to assess an insurance company well ahead of the launch of the behemoth LIC IPO. Keep it with Moneycontrol for everything that you need to know about LIC prior to its listing, and don't forget to share, like and subscribe the video.